September 2008. Three rockets had already exploded. Tesla was burning through cash faster than it could earn it. The global financial system was collapsing. Banks were failing. Investors were disappearing. And one man was watching two companies die at the same time. If Elon Musk had walked away that year, almost nobody would have blamed him. In fact, most people thought that was the only rational decision left. Newspapers questioned his judgment. Investors questioned his sanity. Friends questioned his future. Everything around him was screaming the same message: stop. But he didn't. Years later, people would call that moment courage. Others would call it genius. Some would simply say he got lucky. But almost nobody asks the question that actually matters. Why did Elon see something the crowd couldn't? Because this isn't really a story about Elon Musk. It's a story about a pattern you'll find in billion-dollar companies, in elite athletes, in great investors, in nature itself, and strangely enough, in the traders who survive the longest. Most people think success begins with intelligence, or talent, or confidence. It doesn't. It begins with how you think when everyone else thinks the same. Look at the financial markets. Every day, millions of traders stare at the exact same chart, the exact same candles, the exact same news. Yet, by the end of the day, some walk away richer, most walk away poorer. If everyone is looking at the same information, why don't they reach the same conclusion? Because markets don't reward information, they reward interpretation. And interpretation depends on something much deeper than strategy. It depends on identity. The average trader enters the market looking for certainty, looking for confirmation, looking for someone else to tell them they're right. But there has never been a market where the crowd consistently wins. If that were true, everyone would be profitable. The uncomfortable truth is almost the opposite. The crowd usually arrives too late, buys because everyone is buying, sells because everyone is panicking, and mistakes popularity for truth. Nature has seen this behavior before, not on trading screens, long before markets existed. Out in the wild, a herd survives by staying together. It follows movement, it follows noise, it follows the majority. A wolf survives differently. It doesn't chase every movement. It doesn't panic because the herd suddenly changes direction. It studies, it waits, it decides. Not because everyone agrees, but because the evidence is there. Maybe that's why history keeps producing people who look completely different from everyone around them. Not because they were born different, because they refused to borrow someone else's mind. And once you start looking for that pattern, you begin to see it everywhere. Not just in Elon Musk, but in every extraordinary decision that looked completely irrational right before it changed the world. That pattern has a name. Most people just never notice it. Think back to 2008. Everyone around Elon was looking at the same reality: three failed launches, a collapsing economy, a company that was running out of money. Those were the facts. But something else was happening. People weren't making decisions based on the facts anymore. They were making decisions based on everyone else's reaction to the facts. That's an important difference. Fear spreads faster than truth. Confidence spreads faster than evidence. The crowd doesn't simply share information, it shares emotion. And emotion is contagious. You see it every day in the market. A stock jumps, thousands rush to buy. A candle turns red, panic spreads across social media. Nothing about the business has changed in the last 5 minutes, but thousands of opinions have. Most traders don't react to price, they react to people reacting to price. That's why the crowd is always one step behind reality. Elon understood something different. He wasn't asking, what does everyone believe? He was asking, what is actually true? Those sound similar, but they're not. When SpaceX rockets exploded, people saw failure. Elon saw data. When Tesla lost money, people saw a dying company. Elon saw battery technology improving. The crowd measured today's headlines. He measured tomorrow's possibilities. That's the difference between following opinion and following reality. Now, imagine a wolf tracking its prey. It doesn't chase the first movement it sees. It doesn't suddenly change direction because another animal starts running. It separates noise from information. Every footprint, every broken branch, every change in the wind means something, but none of them means everything. The wolf collects evidence before it commits. Great traders do exactly the same thing. One candle means nothing. One loss means nothing. One winning streak means nothing. The market is constantly trying to trick you into reacting too early. The crowd accepts the invitation. The wolf waits until the evidence is complete. That's why patience isn't really the skill. Clear thinking is. Because once your thinking becomes dependent on everyone else's emotions, your decisions stop being your own. And that is when the market starts controlling you. Most people believe they are making independent decisions, but they're not. They are renting opinions, borrowing conviction, leasing confidence from strangers on the internet. The dangerous part, it doesn't feel like following the crowd. It feels like doing research. But there is a question that exposes the difference. If every chart disappeared, if every influencer went silent, if nobody could tell you what they believed, would you still make the same decision? Most traders couldn't answer that honestly because somewhere along the way, they stopped trusting their own judgment. And the moment you stop trusting your own judgment, you are no longer trading the market. You are trading the crowd. The strange thing about independent thinking is that it doesn't feel powerful, it feels lonely. Imagine sitting in a room where 10 people agree on the same answer. Then imagine You are the only one who disagrees. Your heart beats faster. You begin questioning yourself, not because your evidence changed, because your environment did. That's how human beings evolved. For thousands of years, separating from the tribe wasn't just uncomfortable, it was dangerous. Your brain still carries that survival program today. That's why rejection feels painful, why criticism feels personal, why standing alone can feel like standing in front of a cliff. The market knows this. It doesn't just test your strategy, it tests your psychology. Every time your position moves against you, every time social media celebrates the opposite trade, every time everyone seems certain while you're still waiting, the market quietly asks one question: do you trust your process or do you trust the crowd? Most traders answer without realizing it. They move their stop loss, they chase the breakout. They close winning trades too early because someone else says the move is over. Or they hold losing trades too long because the crowd keeps promising a reversal. Notice what is happening. The market didn't force those decisions, but the crowd did. Now, think about Elon again. When almost everyone believed reusable rockets were impossible, he didn't ask how many people disagreed. He asked whether physics disagreed. Those are completely different questions. Reality doesn't vote. Reality doesn't care about popularity. Reality only responds to what is true. That's why extraordinary people often look unreasonable in the present and obvious in hindsight. By the time the crowd understands, the opportunity is already gone. A wolf understands this instinctively. It doesn't hunt where the herd is looking, it hunts where the opportunity exists. Sometimes those are the same place. Most of the time, they are not. Trading works exactly the same way. The biggest opportunities rarely feel comfortable. The cleanest trades often feel boring. And the trades everyone is excited about usually arrive after the best part of the move is already over. The average trader mistakes excitement for opportunity. The wolf never does, because excitement belongs to the crowd, clarity belongs to the wolf. That's why this mindset has nothing to do with being stubborn. A wolf doesn't ignore reality, it ignores noise. If the evidence changes, the wolf changes. If the evidence stays the same, the opinions of 10,000 people change nothing. That's the balance most traders never learn. They either follow everyone or they reject everyone. Neither is intelligent. The goal isn't to think differently for the sake of being different. The goal is to think independently enough to follow the evidence wherever it leads. And that's the mindset that quietly connected every decision Elon made in his darkest years. Not blind confidence, not ego, not fearlessness, just an unusual commitment to reality over approval. Think about what that really means. If reality matters more than approval, then one losing trade doesn't make you a bad trader, or one winning trade doesn't make you a great one, because neither trade changes reality, it only changes your emotions. That is where most traders get trapped. They don't build their identity on evidence, they build it on outcomes. A winning day makes them feel brilliant, a losing day makes them feel broken. So they spend their careers chasing confidence instead of chasing truth. The wolf reverses that equation. It never asks, did I win? It asks, did I make the right decision with the information I had? Those are completely different questions because good decisions sometimes lose and terrible decisions sometimes win. The market doesn't reward you immediately for thinking well. Sometimes it punishes you first. That's why so many people abandon great systems, not because the systems stop working, but because their emotions stop cooperating. Look back at Elon one last time. People remember the companies Tesla, SpaceX. They remember the headlines, the billions, the rockets landing upright, but those were never the real victory. The real victory happened years earlier, when almost everyone around him was borrowing certainty from the crowd, and he chose to borrow certainty only from reality. That single difference shaped everything that came after. The market offers you that same choice every day. You can trade what everyone feels, or you can trade what the evidence suggests. One path feels comfortable, the other feels lonely. Only one of them gives you a chance to stay in the game long enough to become exceptional. Maybe that's why most traders never reach consistency. They're trying to master indicators before they've mastered their own thinking. They are searching for a better strategy while carrying the same mindset that keeps pulling them back into the crowd. And that is where wolves separate themselves, not because they are fearless, not because they are smarter, but because they refuse to outsource their judgment. Nature has rewarded that behavior for millions of years. Markets still reward it today. Wolves have a name for this: the first wolf law. Independent thinking, not thinking differently just to stand out, not disagreeing just to look intelligent. Thinking independently enough to let evidence speak louder than opinion. That was the edge behind Elon's biggest decision. And it is the same edge behind every trader who survives long after crowd has disappeared. Because in the end, the market doesn't care how many people agree with you. It only cares whether you are right. The crowd follows opinions. The wolf follows reality. If you want to become the kind of trader who stays calm while everyone else panics, who sees opportunity while everyone else sees fear, then don't try to think like Elon. Think like the wolf. Join the pack.